Good morning, everyone, and welcome back to Capital Markets Quickie. I'm your host, Andrid Sella. Let's dive straight into today's main headline, the Consumer Price Index, or CPI for short. For August, it saw a 3.7% rise in the US compared to August of 2022. If we rewind to July, annual inflation was at 3.2%, so we're definitely witnessing an upward trend. And what about the monthly difference? Well, we saw a 0.6% increase from July to August. Now, the more important question, which sectors were the big movers? Well, gasoline tops the list, followed closely by shelter costs. In fact, the energy index alone soared by 5.6% just in August. And meanwhile, food went up a modest 0.2%. Now, if we're taking a closer look at core inflation, which strips out food and energy, then it's up by 4.3% year on year, which is a slight dip from July's 4.7%. So, how did the stock and bond markets respond? Well, there wasn't much drama yesterday. The S&P 500 stayed pretty stable, ending the day without major changes from the previous session, and over in the bond market, 10-year Treasury yields hovered around 4.24%, so no significant movement there. However, given the CPI's uptick in August, it's becoming increasingly likely that the Fed will roll out another rate hike later this year. But it seems the markets have already factored this in. So what should we be looking at? Oil prices. Brent Crude has now surpassed $90 per barrel, and that is primarily the reason why we saw headline inflation move higher in August. And here's a little reminder, headline inflation is the total inflation in an economy, and core inflation excludes energy, food, alcohol, and tobacco. And the good news is that core inflation, which is the more important of the two, continues to slow down. And that's today's quick snapshot of the latest inflation data from America. Stay tuned for new episodes of Capital Markets Quickie every weekday, Monday through Friday. Cheerio!